Most people claim themselves to be a long-term investor. They say, I invest for the long run. I don't get swayed by the ups and downs of the market. I have nerves of steel. However, if we were to look under the hood, actually look at their portfolio, and more importantly, their behavior, we most often find that they're far from being an actual long-term investor. In fact, research shows that the average investor holds their positions for less than a year, with many panic selling during market downturns and missing out on an average of 4 to 5% in annual returns compared to those who stay invested. So here's the question. What are you? Are you an actual long-term investor, or are you just telling yourself that you are because it makes you feel good? Well, today, we're going to really find out. So let's dive in. Let's uncover the 7 signs that prove you're actually a true long-term investor. But before we start, in case we haven't met yet, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. The first sign you're actually a true long-term investor. You don't suffer from overconfidence bias. Let me explain what this means. Overconfidence bias, when it comes to investing, is when you genuinely believe that you're better at making investment decisions than you actually are. It's a false belief that your research is better than the market's research, that your stock picks will outperform, that you have some edge. However, here's the thing about overconfidence. So many other people think this as well. Studies show that most retail investors think they're above average at picking stocks. But if you know anything about statistics, you know this can't be true, because by definition, while half of us are above average, the other half has to be below average. But of course, try telling that to someone suffering from overconfidence bias. They can't and won't accept this. And please don't take this as me saying someone is dumb. I'm not saying that at all. What I'm saying is that the market is very smart, and unless your name is Warren Buffett, smarter than all of us combined. So what does a true long-term investor do? They've made peace with the fact that they probably can't and won't ever beat the market. Thus, they don't spend their evening researching companies thinking they'll find the next Apple. They don't watch CNBC and think, oh, I should buy that. And most importantly, they're completely comfortable putting their money in a boring index fund that mirrors the entire market because they accepted that beating the market is a game you cannot win. The second sign that you're actually a true long-term investor. You resist herding behavior. Herding is when everyone starts doing the same thing and you follow along, not because you believe in what they're doing, but because it's easier to follow than think for yourself. When everyone in the office is talking about NVIDIA and AI, you follow the herd and jump on board. When all your friends are obsessed with the latest crypto coin, you start to get obsessed as well. When people on YouTube are talking about gold going to the moon, you just can't help yourself. You start researching and buying gold too. Now, many of you might hear this and go, that is so dumb. I wouldn't do that. No person with an ounce of common sense would do that. However, if we wind the clock back in history, we see that this herding behavior actually occurs quite often. Think back to the dot-com bubble. Back then, everyone, even people who had completely no experience in the stock market, were piling into tech companies that didn't even have revenue yet. Why? Because everyone else was doing it. And of course, we know what happened after. It crashed, and the global market lost trillions in value, impacting millions of investors. The same thing happened in 2008 with the housing market. The same thing in 2020 with meme stocks. The same thing in 2021 with crypto. The pattern repeats because human psychology does not change. However, a true long-term investor can see this from a mile away because they're a student of history. They don't let the herd affect their investing behavior at all because they see it for what it is. A bunch of people reacting emotionally, driven by the desire to get rich quickly. Thus, if you find yourself completely ignoring the herd when it comes to investing, congrats to you, my friend. You truly are a long-term investor. Sign number 3, you don't fixate on the purchase price. A fancy word for this is anchoring bias, and it's quite brutal for investors who constantly fall for it. Here's how it works. You've been meaning to invest more money into the market. However, whenever you check the price of the fund you want to invest in, it seems too high. The news is saying the market is at its peak. The price-to-earning ratios shows that many stocks are overvalued, and thus we're due for a recession soon. So what do? You wait, and you wait. Sometimes for years, waiting for the stock market to drop. However, the truth is that no one has a crystal ball. So no one really knows if the stock market is currently at its peak or actually at its bottom. Only time will tell. But someone who constantly falls for anchoring bias can't help him or herself from seeing the last price and make every decision colored by that anchor. No, it is way higher than what it was last week. I can't pay that price. The market will drop soon. I'll invest at the perfect time. All from my perspective, a fruitless mental exercise. And true long-term investors also know this. They know past prices are completely irrelevant. Who cares what the price was yesterday? The key is to get into the market as soon as possible and stay in it as long as possible. It's about time in the market, not timing the market. And again, if you share the same belief, if you're continuously buying regardless of what the market is doing, congrats to you, my friend. You have again proven that you're truly a long-term investor. While we're on the topic of long-term investors, I want to share with you a small free gift. Because as you're watching this video, I'm sure you're probably having some of these thoughts. Am I adhering to some of these investment principles? Actually, what is my personal investment strategy? Do I even have one? Should I have one? Well, if you are, you're in luck, my friend. Because I created something called the Investor Assessment Quiz to help you navigate exactly these questions. It's a short series of simple questions, takes just a few minutes, that cuts through the noise and gets to what actually matters, your investing plan. By completing it, you'll receive a free, personalized investing plan that includes 3 things. First, it identifies your investor type. Second, it gives you a sample portfolio aligned with your specific style and risk tolerance. And third, it provides practical strategies to help you stay focused and move confidently towards your financial goals without the overwhelm. You'll find the link to the quiz in the description below, and it's completely free. Just my small gift to you for sticking with me through my dry and boring videos. Alright, with that, let's get back to the video. Sign number 4, that you're actually a true long-term investor. Building off all the signs that we reviewed so far, you're essentially really good at separating your emotions from your investments. This is the psychological foundation for everything we talked about so far. The truth is that our brains are naturally wired to emotionally react. Why? Because we're human. Thus, it's natural that when we see the market drop by 30%, to have an emotional reaction to it. This is why panic selling happens during market downturns, and it is why FOMO, fear of missing out buying, happens during market rallies. But here's what separates a long-term investor from everyone else. You've learned to create space between the stimulus and the response. Thus, when the market tumbles 30% and your portfolio takes a hit, you're not fazed. You don't check your account obsessively. You don't doom scroll financial headlines looking for reassurance. You don't text your brother-in-law asking if you should sell everything. Instead, you recognize what's happening. It's the market doing what market does, and you stay the course. You remember the plan. You trust the process. And to take it a step further, in anticipation of such an event, you've already built a system to remove yourself from the equation. Instead of needing to decide every month where and when to invest, everything is automated. Money comes out of paycheck automatically, goes into your investment account automatically, and gets invested automatically. Whether the market is up, whether the market is down, you're continuously buying. And thus, your system is doing the job for you while everyone else is letting their emotions do theirs. This is a superpower of a long-term investor, and if this describes you, congrats to you again, my friend. Sign number 5, that you're actually a true long-term investor. You accept the fact that you'll miss some of the best days in the market, and better yet, you're totally fine with it. Why? Again, because you understand something fundamental about the market that separates winners from losers. The truth is that the best days in the market often happen unexpectedly. Even the best investors cannot predict which days are the best days. You can't wake up and say, oh, today's going to be one of the 10 best days. Let me get invested. It doesn't work that way. The best days are often sandwiched between the worst days. They come without warning, and the only way to capture them is to stay invested through it all. And a true long-term investor makes peace with this. They understand that 1. Trying to predict which days are best is a fool's errand. 2. The cost of being out of the market, missing those surprise recovery days, is far worse than staying in through the volatility. 3. Their job is not to catch every best day. Their job is to simply be invested continuously and let the math do the work for them. So as mentioned earlier, they automate their investing. They remove the decision making from the equation. Money comes out of their paycheck automatically, it goes into their investment accounts automatically, it gets invested automatically. Whether it's the best day or the worst day, they're buying. And over decades, that consistency, that refusal to try and time the market is what actually builds real wealth. Sign number 6, that you're actually a true long-term investor. You view volatility as a feature, not a bug. Many investors see market volatility and think, oh no, something is wrong. Something must be wrong with the market and my investments. However, to a true long-term investor, volatility does not faze them. Why? Because they understand why this volatility is happening, and once you understand it, there really is nothing to fear. Let me explain. At any given moment, millions of investors are trying to figure out what's a stock worth. And the honest answer is, nobody really knows. A company's true value depends on countless variables: future earnings, competitive threats, economic conditions, technological disruption, management decisions. Some of those things are knowable, most of them are not. So what fills that gap of uncertainty? Human emotion. When bad news hits, say earnings miss or recession fears, investors immediately think about the worst that could happen. Thus, panic selling intensifies and prices plummet. But prices often fall below what the company is actually worth because fear has taken over rationality. Then days or weeks later, cooler heads prevail. Investors realize, wait, the company is still fundamentally strong. The world did not end. Buying resumes, prices recover. This is the emotional pendulum. And here's what most investors miss. This pendulum swing is the feature, not the bug. A true long-term investor understands that volatility is how the market prices in uncertainty over time. It is the mechanism by which bad assets get cheaper, so you avoid them, and good assets occasionally get cheap, so you buy them at discounts. Without volatility, there will be no opportunity for disciplined, systematic wealth building. Consider this. If the market just smoothly went up by 10% every single year with zero fluctuations, everyone would pile in, and prices would get bid up so high that future returns would be unrealistic. Instead, the volatility, the ups and downs, the crashes and rallies, actually creates the opportunity for long-term investors to buy quality assets at reasonable prices over and over again through dollar cost averaging. The short-term traders and emotional investors, they get pummeled. They buy high when everything feels good, sell low when everything feels bad. They lose money trying to dance in and out of volatility. But you understand that volatility is just the market processing information and resetting prices. Thus, you stay calm. You keep investing. You let the market's emotional swings work in your favor instead of against you. Benjamin Graham said it best when he said, in the short run, the market is a voting machine. But in the long run, it is a weighing machine. The voting represents all the emotional chaos and volatility. The weighing represents the fundamentals asserting themselves over time. And this brings us to the final sign. Sign number 7 that you're actually a true long-term investor. You view money as freedom, not status. This, in my book, is the most important one and the philosophical foundation for everything else. Because here's the truth. Most people who fail at investing don't fail for technical reasons. Most often, it's not because they're investing in the wrong fund or at the wrong time. No, they fail because they're investing for the wrong reason. Most invest so they can get rich quickly, so they can buy nice things tomorrow, so they can show to the world that they have money, that they've made it. Thus, they take unnecessary risks. They get sucked into bubbles. They buy when emotions are high, and they panic sell when things get scary. But a true long-term investor like you, you're playing an entirely different game. For you, money is not about the trophy. It's not about the luxury watch or the fancy car or the Instagram-worthy vacation. Money is about options. It's about freedom. It's about the power to make choices based on what matters to you, no one else. Thus, you take calculated, intelligent risk. You don't get sucked into chasing after the latest hot investments. You don't panic sell because you're not desperate. Thus, you simply execute your long-term wealth strategy year after year, market up or market down, and that, my friend, makes you a true long-term investor. Thank you guys for watching the line of giveaway signs. If you want to learn some signs that signal someone is secretly wealthy, please check out my video here. Until next time, all the best.